PayPal hits Broadway, ex-footballer runs afoul of Her Royal Majesty, and our top 3 picks for investment when your crypto coin decides to head south. We'll have these stories and our crypto lesson of the day today on the Coin Republic. Hi, I'm Chris German, your host, broadcasting from an undisclosed location in the deserts of Utah. In this episode, we'll have stories from the land of crypto and a few tips to help you speak the language. But remember, crypto is a blood sport. This is for educational and entertainment purposes only. If you want real financial advice, go find a good financial advisor. But if you want news about crypto and some insight from the people that cover it for a living, pummel that subscribe button and get ready for the best newscast you can't buy on the web. Our top story comes from the center of the universe, New York City.
Spreading the news.
PayPal becomes the latest to go virtual. It was blessed with the venerable cryptocurrency license issued by the great Empire State this week. The online payments firm announced that it would let customers withdraw their crypto holdings to their virtual wallets under this new license. New York introduced what they called the BIT license with a focus to regulate businesses that enable customers with the ability to buy and sell cryptocurrency in the state. The payments firm has offered digital currency buy and sell options via Paxos under a conditional license in the state since October 2020. The New York Department of Financial Services, NYDFS, is the authority regulating the BIT license and issued 20 other licenses, including the one it issued to PayPal. New York introduced the BIT license in 2015 to regulate businesses related to buying and selling cryptocurrency in the state. Some crypto enthusiasts were against the idea, saying it would make crypto even more confusing and slow down progress. Previously, PayPal allowed its customers to withdraw their digital assets to private or third-party wallets, but this move shows that even giants like PayPal are quite optimistic about the future of crypto.
If I can make it there, I'll make it anywhere it's up.
And in other news, an ex-footballer is in hot water with Her Majesty after he tweeted about an unlicensed crypto casino promoting NFT-related products to his followers. The UK regulates gambling advertising, and unless you're registered with the UK government, advertising for said ventures is verboten. 9999999. The UK Advertising Standards Authority asked the UK soccer star Michael Owen to delete his Twitter posts featuring the Punt Casino and their associated NFT products and precipitously blocked UK users from accessing their site. On May 16th, Owen published 2 tweets advertising Punt Casino, which is registered on the Caribbean island of Curacao but has no UK license. This isn't the first time Owens had attracted some controversy over sponsorship deals. TheAthletic.com reports that last month Owen promoted an NFT project which said it was the first scheme of its kind that can't lose their initial value. The idea, some have contested, seems that the NFT contains code that ensures it cannot be sold for lower than the price it was initially bought for, so it therefore cannot be sold for a loss. But if somebody buys an NFT and the price falls, then they cannot reduce their losses by selling up, meaning they lose their entire amount they paid for it. A spokesman for Owen confirmed the tweets were removed and the case is now closed. And moving on. When it comes to investing in the crypto industry, it's not all coins and NFTs. Many crypto companies are diversified, performing services of payments, infrastructure, asset managers, crypto wallets, exchanges, and a host of other industries. So when you're picking stocks to invest in, a good look at all the many legs that might be beneficial is a good idea. Here's a look at 3 stocks that might be attractive to you if you are bullish on getting into the crypto market without going coin shopping. These types of stock groups had a high correlation in the past with the movements of digital assets like Bitcoin, Ethereum, and others. So whenever cryptocurrencies struggle, so do the servicers. But as it happened in recent months, there are still some crypto stocks out there that may not be on the upside down and are in fact actually screaming for a buy. The first on our list is a crypto bank with approximately $16 billion in asset management. Silvergate Capital. They've built the Silvergate Exchange Network, or the SEN. The SEN is a proprietary real-time system that facilitates crypto trading across some big U.S. cryptocurrency exchanges and traders belonging to institutions. The crypto bank's payment system fills the gap created by the non-stop trading of cryptocurrency in the crypto market and the 9 to 5 hours of the U.S. banking system. SEN makes trading more efficient by deploying clear and settled transactions instantly despite the overnight silence from traditional markets. Since Silvergate is one of the earliest in the space that got them in a first mover advantage, which onboarded over 1,500 clients to SEN. Another to consider and second on our list is Signature Bank, having more than $122 billion in total assets. The bank is much bigger than Silvergate, but it's quite similar in that it also runs a payment system that operates in real time and facilitates crypto trading in the off hours called Signet. Considering Signet launched after SEN, they have a smaller user base of just 1,202 clients on its network, including 160 new ones added in the most recent quarter. Signature Bank has just under $24 billion worth of assets and deposits from crypto customers, but it's unclear how much came through Signet. Several reports indicate that Signature doubled the number of major exchanges that use them as their primary banks in the last quarter from 4 to 8. And our final pick of the week is Customers Bancor, the newest player in the space with approximately $19 billion worth of assets under management. This institution also has developed a system for instant payments to support clients in cryptocurrencies, but it also has a substantial portion of its balance sheet devoted to traditional financing. This seems to be the model of the moment, however, for banks dipping their toes into the crypto space. Customers Bancor is the newest player on the quickly ever-expanding board, and there will be lots of players before long. This is a massive growth industry, and many crypto kings and exchanges will rely on their services of more than one of these payment services before long. Now's your chance to get in while the getting's good, without risking a digger on a crashing coin. And now it's time for our lesson of the day. We all know that cryptocurrencies are notorious for volatility. Market prices in crypto country swing from high to low every day, but veterans of the virtual currency tell tales of times when crypto coins showed signs of stability, with ups and downs over an extended period of time. When this phenomenon occurs, traders find themselves in either a bull market or a bear market, and how they treat their coins in these long runs can have a big impact on their portfolio. In today's lesson of the day, we're going to look at the difference between the bull market and the bear market in crypto land, tackle the question of why prices surge and dip, and tell you what you should be doing when it looks like either the bulls or the bears are going to stick around for a while. First up, the bulls. You ever wonder why they chose bears and bulls to describe market conditions? Bull markets got their name from the upward motion of the bull's horns before it charges into battle. And it's used to describe a market that's experienced a prolonged period of growth. When a bull market starts to establish its momentum, prices can increase by as much as 40% in only a couple of days. What accounts for bullish crypto markets, you ask? And how do these periods of prosperity last for as long as they do? Well, here's a few factors. Strong economic conditions in countries where the coin is traded, favorable investor sentiments toward the coin, positive word of mouth from traders with influence such as tech magnates, celebrities, or sports people, influxes of capital from big institutions like tech firms, and support from trusted players in the traditional finance. Crypto markets can be also driven by happenings in the traditional finance sector too. For example, traditional financial securities were affected by the COVID-19 economic crisis, and that led to an exodus of deal makers diving headfirst into the crypto derivatives market. A bull market for a crypto coin can continue as long as the demand outweighs the supply. As long as market confidence remains high and powerful bull investors believe in the market, it can keep going. But Mama said there would be days like this, and no bull market lasts forever. The bears come back when the bulls retreat.
The bears.
Bear markets get their name from a bear's attack style, which is opposite a bull's. Starting from its full height and crashing down with the full force of its weight on its prey, it's the perfect metaphor for falling crypto markets. Sudden dips can result in devastating crashes. When prices fall more than 20% from their highs and continue to move in a downward direction, you know you have entered a bear market. Factors in a crypto bear market mirror those from the traditional market and can include shaky economic conditions or political crises in countries where the coin is traded, Punitive attitudes from governments and major financial institutions when it comes to cryptocurrency regulation. Scandals, like the coin's involvement in a major criminal activity, or rumors of forks or discontinuations of the blockchain involved. Skepticism among both investors and the general public. Bear markets are characterized by shrinking trading volumes, low liquidity, and excessive supply relative to demand. Due to their fear of losing more money as the downturn continues, traders often resort to extreme measures like panic selling all of their assets. If you keep a cool head before making any such trading decisions, you can weather these markets until the happy music starts to play again. But this isn't baseball, and there is no rain delay in crypto trading. You've got to play whether the bears or the bulls are fanning the trading winds. And some who trade in crypto coins must prepare for periods of both feast and famine. If you've got crypto coins in your portfolio, here's a few tips for navigating through either extreme. Know the risks of entering into the speculative market like crypto. Only trade if you're ready to deal with the volatility in price movements, and just like the other investments, only pledge what you can afford to lose. Stay on top of your emotions at all times, in both good times and bad. Be careful about how you invest your cryptocurrency. Don't make rash decisions based on hype or panic. Track any fluctuations that happen in the crypto market you're involved in. It's a good idea to make a day-to-day as well as a week-to-week comparison. This is how you'll be able to read the signs that preclude either a bullish or a bearish market, like a sudden price variation or announcements of support from an influential tech personality or celebrity. In bullish markets, aim to sell high. In bearish markets, aim to sell low. The latter is often more difficult than the former, but a patient and perceptive trader may be able to earn a profit in both circumstances. By knowing first what we mean when we say bullish and bearish markets, and then knowing what will give you the edge as a trader in either situation, you can ride high in crypto trading. And we welcome you to the party, so dive in! Be careful, because there are rocks everywhere, and remember, wait at least a half hour after eating, okay? Well, that's it for today. Hope you picked up a few gems out of this episode, and be sure to tell your friends by sharing this episode with all your crypto pals on social media. I'm Chris German. Thanks for playing along, and we'll see you again next time on The Coin